Hello, I'm greeting you all. My name is Mr. J.M. Kimani, your lecturer in Management Accounting. Welcome to Lesson 4 of Budgeting and Budgetary Controls. Now, Lesson 4 is still on cash budget. So where we look at another question, and these questions come from May 2015, question 5 part B. May 2015, question 5 part B. The question reads, the following forecast relates to J. McKinney Limited. Forecast of revenue and cost for the quarter ending 30th of June 2015. You're given April, May, and June. You're given direct materials purchases, 112,000, 100,000, and 135,000. We are given wages, 90,000, 80,000, and 100,000 respectively. Overheads, production, 34,000, 32,000, 40,000 respectively. Administrative, 22,000, 20,000, and 27,000 respectively. Selling and distribution, 13,000, 11,000, 18,000 respectively. Sales, 360,000, 350,000, and 440,000 respectively. Then you have forecast of revenue and cost for the quarter ending 30th of September 2015. You are given for July, August, and September. Direct material purchases 90,000, 67,000, and 79,000 respectively. Wages 72,000, 54,000, 63,000 respectively. Overheads, production 45,000, 36,000, and 40,000 respectively. Administrative 22,000, 25,000, and 27,000 respectively. Selling and distribution 13,000, 11,000, and 16,000 respectively. Sales 350,000, 360,000, 360,000 respectively. Information number 1. The cash balance forecast on 1st of July 2015 is shillings 90,000. Number 2, the period of credit allowed by suppliers averages 2 months. Number 3, debentures valued at shillings 125,000 will be issued in the month of August 2015, and the amount will be received during the same month. Number 4, a new machine will be installed at the end of the month of June 2015 at a cost of shillings 150,000, and payment is promised in early August 2015. Number 5, sales commission of 3% is payable within 1 month of sale. Number 6, a dividend of shillings 100,000 is to be paid in the month of September 2015. Number 7, there is a delay of 1 month in the payment of overheads and wages. Number 8, 20% of the debtors pay in cash and receive a cash discount of 4%. 70% of the debtors pay within 1 month and receive a 2.5% cash discount. And then the other debtors pay within 2 months without a discount. Required a cash budget on a monthly basis for the quarter ending 30th of September 2015. End of question. Now, this is a quarter is 3 months, so we are going to have the month of July, the month of August, and the month of September. And then we have been told about the purchases. These are paid purchases. We have been told information number 2 that the period of credit allowed by suppliers averages 2 months. So we are going to pay actually 2 months after. We have the information concerning the purchases. We just need to push the purchases 2 months. But for the debtors, this is actually a lot, and we may not have that direct in the cash budget. So we better have a debtors collection schedule so for us to see this issue of discounts. So let's start as a working debtors collection schedule. So this is a debtors collection schedule. So we have details. We have been given several months. I would like us to have all the months involved, and then from there we can have the months that are expected. So we can have April, we have May, we have June, July, August, and September. We can have those months that at least we can determine the months we are interested with. So we'd have the sales. This is total sales, which in the month of April, sales we have 360,000, 350,000, 440,000. Then in the month of July, we have 350,000, 360,000, and 360,000. So this one, we just underline it. So we are going to have the cash sales. This one will be 20% as you are told, but this one will be having a discount of 4%. So it will be 20%, yes, but because of the discount of 4%, we shall collect 96%. So therefore, the collection of total sales will actually be 20% of 96. This will be 0.2 times 96. This is 19.2%. That is like saying the 4% on the amount of cash sales is actually like 0.8%, or either in percentage wise. So we can have this collection that, so this is 0.192 times that there is 60,000, which is 69,120. This is the same as saying that we take 0.2 of 360,000. We get, first of all, 72,000. This is cash sales. Then we less the discount, which is 4%. So if multiply times 0.04, this is actually 2880. And therefore, when you subtract 72,000 minus 2880, we get 69,120. So instead of this, a lot of calculation, although it is understandable, getting the cash sales, then removing the discount, then remaining with the balance, we can work with the percentages. We say that 20% is cash sales, but we are going to have 4% discount, so we are going to collect only 94% of this 20%, which in your case, actual sales is 19.2%. So let's now do that for each and every month. So you have 0.192 times that 350,000. This is giving us 67,200. 0.192 times 440,000. This is 84,480. 84,480. 0.192 times 350,000 is just like what we found here as 67,200, while 0.192 of 360 is just like this one, 69,120 and 69,120 respectively, for the same sales, as you can see. That is now about cash sales. Then you have credit sales, which you have been told in the information that we are told there that number 8, 70% of the debtors pay within 1 month and receive 2.5% discount. So this will be 70%. Then we have 97.5% What percentage is this? Because we are going to offer the discount of 2.5%. 2.5% discount means we are going to receive 97.5%. So in this case, we'll be having 0.7 times 97.5. This is actually 68.25%. 68.25% of the total sales. That should we take 0.6825 times 360,000, this is going to give us, this will give us amount of 245,700. And should we multiply by 350, this will give us 238,875. Should we multiply 0.6825 times 440, this will give us 300. Then of 350, just like this one, will give us, and are we receiving the same month? Let's see. 70% of credit debtors pay within 1 month, not the same month, within 1 month. That means we need to push. We push this amount. So this 330 this should be here, 300. So that now we can have the collection of the sales in May received here, which is 238,875, and the collection for the month of April is in May, which is 245,700. So therefore this will be dash. So we are collecting the following month, but not the same month. That's something not. So we are pushing 1 month because we are collecting 1 month later. Then we can have in this month we are collecting what actually we sold in month of July. So 0.6825 times 350 is just like what we have here, and it is 238,875, while 360 will be 245,700. That's what you're going to receive. And then by the close of September, we shall not have received 68.25% of this 360, which is now such an amount we would have received. Then we have the other one. The other credit sales is, we are told what percentage. The other debtors pay within 2 months without credit, without discount, sorry. So this is 20, this is 70. The balance is now the 30% with no discount. This is 30% of 100% because we are going to collect everything. This is 30%. We are going to collect everything. And therefore, we are going to have payment made 2 months after, meaning the sales of April, which is 360, we are going to have 0.3 of 360. Sorry, not 0.3. This is 10%. Sorry for that. I meant 100 from this 90 is 10%. 10%. So 10%, I have taken 100 total sales. I have already received 20%. Minus 20%. I have received again 70%. That is 10% remaining. 10% of 100 because we are collecting everything will be 10%. So therefore, we'll be having 10% of this 360, which is at 6,000 collected 2 months after without discount. 10% of 350 is at 5,000 without discount. 10% of 440 is 44,000 collected 2 months later without discount. 10% of this is at 5,000 2 months later without discount. And that tells you that by the close of the period, we will not have received the collection of the month of August and September concerning the 10%. And that's all. So this now will give us the period we want. We have been told to prepare a cash budget for the 3 months up to September. So we want only July. We want July, August and September. This is what we are interested in. So the other months are to assist us push to get our periods receipts. So this is going to be 67,200 collection plus 300 plus 35,000. This is giving us 402,500. Then this is 69,120 plus 238,875 plus 44,000. This is 351,995. Then you have 69,120 plus 245,700 plus 35,000. This is a 349,820. Now that is the collection that we are expected to have in those 3 months that we need in our cash budget. So this is the collection. So with that, now we can move to the cash budget. So this is our cash budget. So we'll have the details. We have June, not June, but July. We have July. We have August. And you have September as our periods. So this is the format of the cash budget. Now, the opening balance here, balance brought forward. Then you have receipts. The same format we did in lesson 3. So as we look at our cash balance in July, we have been told clearly in information number 1, the cash balance forecast on 1st of July was 90,000. So we can have here 90,000 as our opening balance. Then the receipts we can have from debtors. This is from debtors, which is what we have done the calculations. We have the 402,500. We have the 351,995. We have the 349,820 as the collection. Then we from our statement of forecast, we don't have any other receipts. Everything is payments, and even in the information, you don't have any other receipts apart from information number 3, that you're told there that debentures valued at 125,000 will be issued in the month of August, and the amount will be received. So we have here debentures. This is debentures. We are going to issue these securities to the investors who are going to buy and pay us money. We are going to receive an amount of 125,000 in August. So dash 125,000 is a cash receipt. We don't have any other. The rest are payment, like the machine, the commission, dividends. It will be paid, everything. That's all about it. So we can have the total for the receipts, then you can have the payments. Now the payments, we have, we start with the suppliers. So these 2 suppliers. Now we need to note something, that we have been told in information number 2 that we are given 2 months. So in the month of July, we expect the suppliers for the month of May to pay us here. If you look at May, the purchases of the month of May, we have been given direct materials. We are given 100,000. That is to be paid here. Why? We have been told 2 months. We pay them 2 months after. So instead of paying in May, we don't pay in May, we don't pay in June, we pay in July. For June, we make payment in this August. So June purchases are 135,000. 135,000 here. And then the payment of the month of July, the purchases of July to be paid 2 months later, which is going to be in September. So the purchases for the month of July, is actually 90,000. We put it here, 90,000. That's all. So we have pushed 2 months after or 2 months later. Then we go to information number 3. We are through. Number 4 is about a new machine will be installed at the end of the month of June at a cost of 150, and the payment promised in early August. So you can have here, this is a new machine. New machine will be paid early in August, and early in August means now we need to put this cost of 150 in the month of August, 150,000 dash for September. That's number 4. Number 5 is sales commission, 3% payable within 1 month of sale. So this is a commission. So commission is actually 3%. So we're going to have 3% of the sales of a previous month. Like now, we have 3% of the sales of June. June sales are actually 440. 3% of the July sales. July sales is 350. 3% of August sales is 360. So meaning I am recording in the month of receipt or of a payment. I'm paying 1 month after. 1 month after. So that means within 1 month of sale. So let's see, 3% of this will give us what? So 0.03 times 440,000. This is actually 13,200. So 0.03 times 350. This is 10,500. And 0.03 of 360, this is 10,800. This is to be paid in those months. Remember, the commission was supposed to be, like now, this one was supposed to be for June, but you have paid in July. For July, you are paid in August, like that. Then information number 6, a dividend of 100,000 is to be paid in the month of September. So you have dividend here. Dash 100,000 in the month of September. That's number 6. Number 7, there is a delay of 1 month in the payments of overheads and wages. So we come to when you have overheads here, and overheads, at least we can have all of them. This is production and administration, as well as selling and distribution, which you're going to have them listed. So you can have here overheads in the name of production overheads. We have in the name of selling and distribution overheads, and in the name of I've skipped administration, and then selling and distribution. So you have administration here, and then selling and distribution. So you have admin overheads, then selling and distribution overheads. Then you have also wages. Now, all these expenses, we are being told that they are being paid in arrears, so 1 month later. So we just need to push the overheads and the wages for the month of June. All of them, we record them in the month of July. So in the month of June, we record all of them in the month of July. So June, we just need to copy I have 40,000. I record it here. 40,000. I have 27,000. I copy there. 18,000. I copy here. And I have wages. Wages actually is 100,000. I copy here. All these are expenses of June. We record them in July because we are paying them 1 month after. Then for July, the same category, record 45,000, 22,000, 13,000, and wages of 72,000. Then we go to the month of August. August we pay in September. This is that 6,000, 25,000, 11,000, and 54,000 for the wages. That is it. So with that now we are supposed to balance this question because the payments for September are not going to be paid in that month, will be paid in the month of October. So let's have the total payments. This time there is no overdraft, no condition. So you can just have the payments here. So payments, we have 100,000. We have 13,200, 40,000, 27,000, 18,000, 100,000. This is giving us 298,200. This time you are not told that in the administration or any other expenditure there is overheads. No, there is depreciation. So therefore you cannot remove any amount of depreciation. So we have the other month is 135,000 plus 150,000 plus 10,500 plus 45,000 plus 22,000, 13,000, 72,000. This is giving us 447,500. Finally, we have 90,000. We have 10,800, 100,000, 36,000, 25,000, 11,000, 54,000. This is giving us 326,800. Now you can start balancing because in the first month, July, we have 90 plus 402, which is 492,500. This 492,500, should you subtract these 298,200, then I'll have a balance of 194,300. This is now my balance carried down. Then I bring it here, 194,300. I add to 351,995. I add 125,000. This is 671,295. I subtract this 447,500. I get to 23,795. I bring it here to 23,795. I add 349,820. 820. This I get 573,615. And then I subtract my 326,800. 326,800. This will give us 246,815. And this now become our closing balance of cash by the end of September. And that is what was required as far as the question was concerned, as we are having the cash budget and we required. So with that, now we were able to determine the total cash collection, and that is the only item that had an issue. Remember, the discounts do not reflect any cash in, so or cash out. So we can only exempt and indicate the amount that we are collecting from the customers. But the rest, like the suppliers, remember we are paying 1 month after, and that's why I've recorded for you that you are paying for the month of May like that way. When it comes to the other, like now commission, we have paid also 1 month after. When it comes to the dividends, okay, but for the other overheads and the wages, we are told we are paying them 1 month after. So you have to push and remember how to push that, and then you balance. That is it about such a question, and we come to the end of cash budget. However, in the lesson 5, we are going to look at the master budget. Now, master budget is actually a combination of all the functional budgets we have covered, as well as now the income statement and the balance sheet. So let's meet in lesson 5, but for now, have a lovely time. Thank you.